So we have some good news finally. Consumer prices are dropping, especially on things like vehicles and on airline fares. This is actually pretty good news. Now, whether you're buying a new vehicle or buying a ticket to go somewhere, doesn't really matter. The good news is that we are now seeing inflation cool down, which means prices are not rising as fast as we once expected. That's good news. And the fact that we still have uncertainty with tariffs, but now we know that prices are not just going to skyrocket, that's good news for the Federal Reserve as well, because there may be a even bigger push to lower rates faster, which means we could actually see additional spending, which means you can go potentially buy a home, buy a car, open up a new line of credit, and things will not just balloon out of control because your interest rate will be so high. Today we're going to explain what's going on. We're going to touch on the CPI report that came out just this morning, and then we'll talk about the news coming out of China and the United States. So I'll break all this down in just a moment, explain what is going on and how this will impact you and I. But first, all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So let's get right to it. Look at this right here. It says U.S. inflation rises 0.1% in May from the prior month, less than expected. Let's read it. It says the Consumer Price Index, a broad-based measure of goods and services across the sprawling U.S. economy, increased 0.1% for the month, putting the annual inflation rate at 2.4%. Economists surveyed by Dow Jones had been looking for respective readings of 0.2% and 2.4% respectively. We hit the 2.4%, but we only increased by 0.1%. That's actually pretty good, okay? Because this is what the month-to-month change looked like previously, okay? You can see it, right? The only one that was negative back here in March, okay? Well, then all the way back here in June of 2024, right? So you can see it's been slowing down, especially from this, right? We're not seeing this anymore. That's good. That's really good news, okay? But I want to read you the core CPI as well. It says excluding food and energy, core CPI came in respectively at 0.1% and 2.8% compared to forecasts of 0.3 and 2.9%. It says Federal Reserve officials consider core a better measure of long-term trends, with several expressing concerns recently over the impact that tariffs would have on inflation. Again, you take out food and energy. Tariffs, what we were experiencing, what we were expecting from tariffs, especially over the summer, was something very interesting. We were expecting prices were going to surge, especially when we had tariffs on Chinese goods of 145%. That has actually been paused, and the tariffs are only at 30%. Now, most people, myself included, many economists, were all thinking, okay, well, prices have to go up. That's the only option. But listen to this. Tariffs played a factor in this, but not as big as we thought, because companies do not have power. They don't have the pricing power to just raise prices to whatever they want. This is actually good news for inflation, because companies don't have that pricing power that they once did back during the pandemic. What they have to do is they have to pretty much stay competitive. They have to keep their profit margins very slim. Okay, they're running at the margins of a Walmart and a Costco, right? Their margins are very thin. But their philosophy is, let's just sell more inventory. That's it. Let's just sell more inventory, and we'll make a little bit on every single item, as opposed to making 50% on these items, 50% on those, and 2% on these. Okay? So the fact of the matter is this. The annual inflation rate at 2.4% is not bad. This actually puts more of the spotlight on the Federal Reserve to potentially lower rates a little bit faster, but add a little more aggressively as well. But we'll see. Now, here's something that Goldman Sachs says. Listen to this. Goldman Sachs says, and I quote, "Inflation in May was lower than anticipated, suggesting that tariffs aren't having a large immediate impact because companies have been using existing inventories or slowly adjusting prices due to uncertain demand. While we might see some price increases on goods later, service prices are expected to remain stable, suggesting any rise in inflation is likely to be temporary." Okay. Now, let's talk about that for a second. So, Goldman Sachs says the reason why we aren't seeing prices affected immediately is because companies have been using existing inventory. They have. Okay? They have been using existing inventory, and even when the goods on Chinese imports were sitting at 145% tariffs, we weren't seeing a lot of full cargo ships coming into the U.S. We just weren't. What we were seeing was companies were pretty much redirecting their inventory from China to other countries, okay, that had a much lower tariff. They would redirect the inventory there, and then that's where they would end up buying. Is from those countries. That's where they would get their inventory, not straight from China. Because 145%, it just made sense to ship it to another country and then receive it from them. You know, many companies said they were doing this. Just another loophole. But they found it, and they worked around it. I want to show you this one as well, though. Look at this. It says, Trump says China will supply rare earths in done deal. Okay. Now let me read a little bit of this to you, though. It says right here, U.S. President Donald Trump Wednesday said that China will supply rare earths up front to the U.S. as part of a trade agreement. The relationship between the world's two largest economies is excellent, Trump said in a post on Truth Social, while adding, "We are getting a total of 55% tariffs. China is getting 10%. He added that magnets and other necessary rare earths will be supplied upfront by China and that the U.S. will in turn take certain concessions, such as allowing Chinese students to attend U.S. colleges and universities. Okay. So, right now it sounds like there's a lot of positive news. Okay. We didn't know because again, China said that they were going to, pretty much put a cap on what the United States was getting. So the good news right now is we have some type of trade agreement, according to Trump. Again, we don't know for sure. Okay, we don't know what it looks like. We don't know exactly how this plays out. Again, over the past couple of days, Monday and Tuesday, we knew that the United States and China were having talks over in London. Okay, great. But this wasn't President Trump. This wasn't Xi Jinping. Okay, these were others that were going there on their behalf. So right now we don't know exactly what's going to happen. But what I can tell you is, if the United States is getting closer to an agreement with China, that's good news. If the United States does have an agreement as far as rare earth, that's good news as well. And if the United States is not seeing inflation run up, that's really good news too. So right now, consumer prices are starting to drop, which again is good news. So as we get more information on this, I promise I'll bring you all the latest news and updates. But that's what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.